Welcome to Financial Focus, brought to you by GulfCoast Financial Services founder and CEO, John Kuykendall. John and his team of financial, legal, and tax professionals have been providing North Florida savers and investors sound, comprehensive financial guidance for over 30 years, helping you to achieve important life and planning goals. Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting GulfCoastFinancial.net.
And welcome into the program. This is Financial Focus, brought to you by the best of the best in financial services, now rated best of the best 9 straight years and running by the readers of the Lake City Reporter in financial services. Another feather in the cap for the job that they do there at Gulf Coast Financial Services, now serving proactive savers and investors across and around North Central Florida for more than 31 years. Founder and CEO John Kuykendall here with us as always. And John, today going to talk about 3 of the most important reasons that we formulate a specifically written, financially focused income plan for retirement.
Well, that's right, Peter. The income plan is really important in retirement. I mean, how can we retire when we don't have a roadmap? I mean, you don't know how much to spend, you don't know how much you got coming in, and certain things are certainly, they're going to come in every month, but you're also going to have those hidden things that we're going to talk about this morning. I mean, I've often said that retirement's not for wimps, and I believe that. I thought that it would be a lot simpler. I didn't think there was as many pitfalls, and life has certainly shown me that that's not the case. And today, for a long time, we always planned on when you retire, you're going to need 60 to 70% of what you're making now. That's not the case, Peter. Now we're going to need 100% and even more as we go forward because of inflation and just the cost. Everything costs more.
Well, adding up all of the expenses, retirement can be pretty costly. Expenses do not go away in retirement. The paycheck does. And we've got a finite amount of money and an unknown period of time that we've got to make that last. So, John, identifying our biggest expenses, probably a very important step in making sure that we can have a reasonable sense of confidence moving into and making our way through retirement. Let's talk about those big expenses that sometimes sneak up on people, or at least we need to be more cognizant in planning and preparing for.
Well, I think the biggest one, Peter, that we don't realize is taxes. While we're working and we've got that paycheck coming in, we know that they take the taxes out and they give us a check for the balance, and we live on that. Although I just read that, credit cards went up to $1 trillion outstanding. So a lot of people aren't living on that now. And we probably need to get back to that. But anyway, taxes certainly are one that's going to hit you. Your Social Security. People think that Social Security isn't taxed. Well, it's not. But based upon how much money you make, then part of your Social Security, up to 85%, could be taxed. That's a lot of money, Peter, when we start to sit and think about a check already being reduced because we have to pay income tax. And then there are other penalties that we have, such as the Medicare IRMA penalty. The more we make, we may go over that threshold, and our Part B premiums can go up. It's not like, I know in our zip code, the Joe Namath, I want all I can get money back guarantee doesn't work for us. Our Social Security and our Medicare, we don't get any extra benefits.
I know that, John, you help people crunch these numbers, and this generation has done a good job in accumulating and amassing more personal wealth than any previous generation. But by and large, those dollars are in yet to be taxed, tax deferred, will be taxed at some point, retirement accounts. And we've got to understand the difference between that lump sum that we see on the statement and what we actually get to keep out of it. You have the ability to run some analysis there and crunch those numbers. It's staggering for like the $500,000, $1 million 401k or IRA for a 60-year-old the projections for how much we are going to pay in taxes over our lifetime really can be a little kick to the gut somewhat.
Well, when you sit and think, well, I saved $1 million, that's really not your money. You owe the government probably 30% of that, or 300,000. So 700,000 is what you've got. People don't realize that that money is not taxed. And so that's one of the reasons we do Roth strategies and try to convert the money into something that will be a tax advantage, tax-free portfolio. So there are some things that we can do. Now, the longer we wait, Peter, and if we get into where we're actually on Medicare and Social Security, it's not quite as easy to do those Roth conversions. And the penalties are a little steeper because of the additional taxes. But certainly, everybody needs to plan. And that's what we do, is we sit down and look at your income tax, because we do taxes here. So we do tax planning as well. And we will look and see how we can help you save money on taxes. Because, as I said, taxes are the number one concern that I have in retirement. And also, Peter, we don't forget, 2025, the tax code as we know it today goes away. So January 1st of 2026, we get a whole new tax code. And who knows what that's going to be. Capital gains tax could be more, certainly income tax. We could lose the standard deduction, which most people are using now. The majority of people are using that $13,000 standard, or $12,700 standard deduction, for a single individual. So those things are going to be subject to change on January 26th, which isn't that far away.
No, it's not. Moral of the story, ladies and gentlemen, be proactive and vigilant in how you are setting yourself up for taxation and that tax liability in the future. Taxes are all but a certainty. No, scratch that. As Ben Franklin said, there's only two things in life that are certain: death and taxes. So taxes are a certainty into and throughout retirement. They do not go away. It is your largest known expense in retirement. So if you want to have a more confident retirement, address it, plan it, control it, and minimize it wherever possible. John, number 2 is maybe even more scary, however, because of the uncertainty about it, but the likelihood and the cost and expense if we do incur those healthcare expenses.
Yeah, Peter, according to the Healthview Services 2017 survey, an average healthy 65-year-old couple could expect to enter retirement spending $321,994 on medical expenses during retirement. Now, that's a lot of your nest egg, and that doesn't include long-term care costs. That's just the normal daily things as we age. And the thing that, I've learned, Peter, as we get older, more parts break down. It's kind of like your car, the longer you drive it, the more miles you put on it, you're going to have to do more maintenance on it. And so the hip replacements, the knee replacements, the other things that happen to us as we wear our bodies out in retirement, those have to be paid for. And now Medicare will do a good job in paying for that. But don't forget, we've got a Medicare crisis in the United States that in 2033, we're supposed to run out of money in Medicare. So something has to be done to give us better coverage. One of the things is that those of us who have saved a little bit of money could end up not getting all the benefits that we're getting now. So it could cost us even more. So we have to plan for healthcare in retirement.
Well, that is a very scary potential cost, and we want to be proactive and protect against that. Ladies and gentlemen, get the plan put together. Discuss what your plan for healthcare expenses may be. Have that in place ahead of time. Be proactive about it, and it will help you control those costs and expenses, or the impact that they could have on yourself, your spouse, your family, generationally, potentially. So, John, the third one is what has at one point in time been called the silent thief, but we've been hearing an awful lot about inflation. Our third largest expense in retirement that we need to plan to control?
Well, this year especially, we've had high inflation, which the government has brought down considerably, but it's still higher than normal. And so inflation is the silent killer of your retirement because things are certainly going to cost more. Peter, if you think back to what you paid for your first home or your first car and look at what you pay now for an equivalent house or equivalent car, it's unbelievably the difference. I mean, you could buy a 67 Volkswagen Beetle for $2,500, brand new. And now, we're paying 20, 30, 40, 50,000 for vehicles, plus the maintenance and the upkeep. It's one of those things that everything costs more. And as we increase our wages and get to this $15 minimum that the nation's got, everything that's delivered to you is going to cost you more. How are we going to pay for that in retirement if we don't plan for it? How are we going to be able to go to the grocery store and get the food? I mean, now you go get a small bag, it's $100. Mm-hmm. I remember at one point in time that my wife and I, when we first got married, we lived on $10 a week.
Yep.
And I don't know what we buy now. I guess a couple packs of hot dogs, and have to divide them up, and make them last. I don't know, but it's certainly killing us. The amount of inflation and the amount that we're having to pay for goods, and it's not going to stop, Peter. It's only going to increase, and so we have to use an inflation number in our projection so that as we age, your retirement income expectations go up. That's why I said, Peter, you're not going to live on less, you're going to live on more. And it's not because your lifestyle changes, it's just because the cost of goods and the cost of things you need to live cost you more.
Well, we have got a finite amount of money and an unknown period of time to make it last. Most people, John, earn a comfortable enough amount of income during their working years that they can account for these expenses, but not the case in retirement if we do not have that specific written, financially focused income plan. You've got to have a plan, identify and address the largest expenses into and throughout retirement, ladies and gentlemen. And that is what they do there at GulfCoast Financial Services and have been doing for clients, proactive, conscientious savers and investors across North Central Florida for more than 31 years. In the last 9 years straight, named best of the best in financial services by the readers of the Lake City Reporter. So give them a call if you'd like to get your plan put together or just double check things that make sure you're on the right track. 386-755-9018, 386-755-9018, 386-755-9018. And John, I know you're excited. That upcoming book release, Retirement is Not for Wimps.
Well, that's right, Peter. I'm really excited that we've got that book out. I can't wait to get it out to the readers and to our clients, because retirement isn't for just, it's not for wimps. If you're not strong enough and plan enough, you're not going to have a retirement.
Well, ladies and gentlemen, part of that planning process can start right there at GulfCoast Financial Services, or if you've got the tools but want to complete them, put them together and formulate the plan. Again, give a call, 386-755-9018. You can find the link directly below in the description of the video. If you're watching on the video, you can also find more resources, previous editions of the program and the podcast there on the Gulf Coast Financial Services website, gulfcoastfinancial.net, gulfcoastfinancial.net. John, always a pleasure. Thank you for bringing the perspective that you do and talking about the issues that we need to address.
Thank you, Peter. Great to be here. Have a good week.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting gulfcoastfinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through GulfCoast Financial Services Inc., a registered investment advisor in Florida. GulfCoast Financial Services Inc. is not affiliated with Kovac Securities Inc. or Kovac Advisors Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.